2025 was an exciting yet volatile year for the market. After the S&P 500 delivered 2 consecutive years of double-digit gains in 2023 and 2024, it posted a 17.88% total return last year, including dividends, well above the index's long-term historical average of roughly 10%. Can the market extend this bull run into 2026? In this video, I will first share my view on the macro outlook, including the key risks investors need to be aware of. Then I will break down how I'm positioning my portfolio around 6 high-conviction investment themes, along with the specific stocks I'm investing in within each theme. This channel is all about investing and personal finance to help you retire early. At the macro level, I expect the US economy to remain solid, with GDP forecasted to grow 2.3%, according to the Federal Reserve's December meeting. As President Trump prepares to finalize the next Fed chair when Jerome Powell's term ends in May, markets generally expect the new chair to be more dovish, supporting a continued easing of monetary policy, an environment that's typically favorable for risk assets such as stocks and crypto. With the Big Beautiful Bill benefits taking effect in the new year and many applied retroactively to 2025, ranging from lower individual taxes to corporate tax incentives, consumer spending and business investment are likely to remain strong. This is a critical driver of US GDP growth in 2026. In addition, deregulation policies could further boost business activity, including IPOs, mergers and acquisitions, and broader adoption of crypto assets. Taken together, these factors create strong tailwinds that support the thesis of another positive year for equities. That said, several short-term risks deserve attention, including the possibility of a government shutdown following the January 30 extended budget deadline, midterm elections that could shift the balance of Congress and complicate policy execution, uncertainty surrounding the Fed chair nomination and the central bank's independence, continued AI overspending and potential bubble concerns, escalating trade disputes and ongoing geopolitical risks, and an overheating economy that could reignite inflation and force the Fed back into a tightening cycle. With the exception of a renewed tightening cycle, I view most of these risks as opportunities to buy high-quality companies. At this point, I do not believe a recession is likely. Here are my 6 investment themes for 2026. The first one on the list is AI infrastructure build-out and the rise of AI software capabilities. Infrastructure demand is expected to continue growing, forming the foundational technologies that enable AI software and applications to grow at massive scale. I spent some time watching this year's CES keynotes from NVIDIA and AMD CEOs, Jensen Huang and Lisa Su, and one thing became clear. The AI revolution we've experienced so far through large language models like ChatGPT is only the beginning. What lies ahead will be significantly more profound. AI is rapidly expanding into nearly every industry, from advanced manufacturing, engineering design, and entertainment to healthcare, biotech, defense, robotics, scientific discovery, and even space exploration. This shift is fundamentally changing how we build, work, live, and discover new technologies at speeds never seen before. The growth phase of AI applications will be far more explosive and impactful than the internet era. At the core of this transformation is compute, the backbone of AI. According to Lisa Su, global compute demand is expected to grow 100 times over the next 5 years. Many of the most powerful AI innovations are already happening behind the scenes, in warehouses, on factory shop floors, in operating rooms, and inside pharmaceutical labs, areas most consumers and even many investors rarely see. Because of this disconnect, it's easy to be distracted by headlines about an AI bubble or data center overbuilt. But after listening to 2 legendary CEOs working closely with industry leaders to solve real-world problems, I'm more confident that we are still in stage 1 or at most the very early stage 2 of the 3-stage AI revolution. I explain the AI boom cycle in more details in this video. Stocks I own: NVIDIA, Broadcom, AMD, Micron Technology, Alphabet, Palantir, Meta, Salesforce, Microsoft, and Amazon. Number 2, robotics and autonomous driving. Closely related to AI, this theme focuses on physical AI, the combination of mechanical hardware and advanced software, or enabling machines with AI brains that allow them to perceive, decide, and act autonomously in the real world. Although still in the early stages, progress in this area could meaningfully reshape manufacturing, logistics, transportation, and consumer assistance in the decades ahead. Stocks I own: NVIDIA, AMD, Alphabet, Tesla, and emerging robotics companies such as Serve Robotics, which is currently in my watch list. Number 3, cybersecurity. As AI capabilities continue to advance, bad actors are becoming more sophisticated as well. As a result, cybersecurity prevention, detection, and protection will be increasingly critical, making this a multi-decade growth trend. Stocks I own: Palo Alto Networks and CrowdStrike. Number 4, energy independence. Energy supplies is emerging as a key bottleneck for AI advancement. According to industrial projections, US electricity consumption is expected to more than double by 2028. Stocks I own: the utilities sector ETF XLU. XLU serves as a traditional defensive allocation in the portfolio, offering a dividend yield of over 2.7%. At the same time, it provides exposure to growth-oriented independent power producers benefiting from the AI boom, such as NextEra Energy, Constellation Energy, and Vistra. Hyperscalers such as Meta, Amazon, and Alphabet signed a pledge last March to support tripling global nuclear energy production by 2050 and have begun making deals with the independent power producers to ramp up nuclear capacity in the US. Number 5, defense, aerospace, and space exploration. Commitments to increase NATO budgets, continued US defense modernization, including drones, missile defense systems, Iron Dome capabilities, shipbuilding, and AI-driven warfare, along with ongoing geopolitical risks, are driving sustained defense spending. Commercial aerospace and space exploration may also benefit from growing demand for satellite communications, evolving trade agreements, and the potential development of in-orbit data centers. Stocks I own: Palantir, GE Aerospace, and Raytheon Technologies, as well as a potential IPO from SpaceX. Smaller names on my watch list include Rocket Lab, Planet Labs, along with broader ETFs such as XAR and ITA. Personally, I prefer companies with both defense and commercial exposure for better diversification. I shared my 2026 investment themes and recommendations with my exclusive Patreon members on New Year's Day, including my views on defense and aerospace, well before recent developments involving Venezuela, potential conflicts with Iran, and President Trump's call to raise the 2027 defense budget by 50% to $1.5 trillion. Since then, the sector is already up nearly 10% year to date. If you'd like access to my investment strategies and timely market updates, I invite you to join this group of like-minded investors. I'm currently offering a 1-month free membership, so be sure to take advantage of the promotion before it expires at month's end. The final theme: modernizing finance and expanding capital markets. Further deregulation and crypto-friendly policies could support fintech innovation, while traditional investment banks benefit from increased IPO activity, mergers and acquisitions, and broader capital markets momentum. Stocks I own: SoFi and Robinhood. Stocks I plan to buy: JP Morgan and Goldman Sachs. Despite a constructive outlook, maintaining defensive positions across consumer staples, healthcare, utilities, and certain value companies remains important for managing downside risk in a portfolio. Stocks I own: XLU, Apple, Costco, Walmart, TJX, Johnson & Johnson, MasterCard, Visa, Netflix, Monster Beverage, and Celsius. By the way, Monster Beverage and Celsius were stock ideas that came directly from discussions with our Patreon members, another benefit of being part of the investing group. As you may have noticed, some stocks span multiple investment themes, which gives them an even stronger potential to outperform the market in 2026. Wishing everyone another successful and exciting investing year.